please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair, and it's turning out to be a bit of a bounce back for us. We're back at around 10,500 as we speak for the Nifty, but there's a little more work that we can do at these levels. But the Bank Nifty also is step in step with what's happening with the frontline indices. What seems to be outperforming today is the mid-cap index, up around 1.4% currently for the mid-cap index. Remember, in Friday's trading session as well, there was a bit of an outperformance which had taken place for that particular index as compared to the Nifty as well as the Bank Nifty. So that momentum seems to be continuing into today's trade. A lot of stocks in focus, so something like Tata Steel, Sun Pharma, Aurobindo and a couple of others which are moving around today, and not to mention State Bank of India, which is in focus on account of its numbers. Hi Prashant.
Ekta, hi. I think the template for the market still remains what it was last week, which is essentially watch global indices keenly and carefully, because I think that's going to be the driver, we like it or not. The market is going to be driven by individual things, one-off here and there. I mean, results, for example, we got really big numbers on Friday, and sure, the market will react. But at an aggregate level, I think it still very much remains a market which is going to be globally driven. What we basically had on Friday is essentially a market in the US which looked panicky at one point and then recovered furiously and closed higher. So I think most of Asia market here, everything is kind of sort of trading off of that. So let's see. There is some semblance of things settling down with global financial markets as well, because this is being driven by that. For now, 10,520. There is a bit of a pickup in the last 5-7 minutes of trade as we speak. I mean, in terms of the sectors which are doing the best, it's real estate, it is pharmaceuticals, and maybe you could look at metals. Yeah, metals. So those are the three: real estate, pharma, and metals, which are the top gainers. Real estate and pharma have got gains in excess of 2%. I'm talking about indices. The metal index has got about 1.25% odd gain right now. We'll get you sort of more on market color in a bit, but let's get some strategies out of the way, as always, on the top of the show. Sudarshan Sukhani is with us of S2Analytics.com. Sudarshan, morning. Good to have you here. Your sense on whether the market will hold, or do you think at some point it sells off again?
Yeah, good morning again. Well, I'm talking about a short-term view, and my short-term view is that these markets are likely to hold and actually become a buyer's opportunity. In the morning, we suggested going and buying the Nifty. And on Friday, we saw the US markets move violently up and down. Volatility was at its peak, but it closed higher. My own idea is that this increase in volatility on Friday was actually an exhaustion of selling. So with selling exhausted and behind us, and support holding in the US markets, in the Indian markets, the 10,400 level is holding here also. I think there's a buying opportunity. Now, how long this opportunity will last, where we will find resistance, that is difficult to say. But for the short-term trader, it's a good time to be long and be a buyer.
Okay, what would your stocks be, Sudarshan?
Well, so we are looking at buying whatever we can, and mid-caps are likely to outperform in this leg of the up move. Apollo Hospitals is a buy. That stock has been doing well after these mini bear market of its own. It's now come out of that correction. It's probably looking higher. Indigo is a buying opportunity. It's not just the crude prices which are also giving it some good effect, but otherwise also the sense is that a small trading range is breaking on the upside. And finally, that big stock L&T. L&T, I think L&T is likely to lead the infra sector, and it should be in everybody's portfolio. So look to buy mid caps and selected large caps.
Interglobe, as Sudarshan pointed out, 1270 I think was the target. The high today on the futures is about 1273. It's at about 1257, 1258 now. I think had it not been for that issue with engines, with oil coming off sharply as it did last Friday, you would have seen some more strength here. But there is news flow on the other side weighing down as well. Okay, let's get some queries answered. Then we've got questions coming in from viewers. The first one is from Prashant, who has 200 shares of Yes Bank. He's paid 342 rupees each for them, and he wants to know if he should add more. Sudarshan, what would you tell him?
I think the idea is to sell Yes Bank. There's no need to add more. I would say he should exit. Unfortunately, Yes Bank has now become an underperformer among private sector banks. So focus on maybe HDFC Bank, which is the best, or even ICICI Bank. And I have shares in ICICI Bank, that's a disclosure. But I would suggest sell this and shift to the other larger private sector banks.
1 points higher on the Nifty, 10,517 odd is where we are trading at. Numbers coming in, this is what Lambodara Textiles, third quarter, 73 odd rupees, stocks up, locked up 20%. What we're going to do is turn our attention to the commodity market, and there is reprieve if you look at commodities, especially from oil. I mean, oil was racing away to 70 plus. It's now under $60 a barrel on WTI. It's up 1%, so off the lows, but 59.84 should be read very good for India's macros. Manisha is here to tell us what's driving it and what are the cues going to influence it going forward. Manisha, morning.
Morning, Prashant. Thank you so much for that. Well, yeah, 71 is what we saw in the Brent prices, which are holding around 63. But we clearly have broken below that $60 per barrel mark on Friday. And even with a percentage point gain on your screens, we haven't been able to come above that $60 per barrel mark, where the major blame can actually go to the U.S. shale output, which is at record highs at 10.25 million barrels. Remember, we did see the prices run up, and there was good cash flow shown in the books in the fourth quarter of 2017. And that led to a lot of rigs come back on ground. If you look at the last week itself, the U.S. rig count has increased by 26 to 791, which is the highest number that we have seen since April 2015, and that has been pulling the prices down. The U.S. inventories also have been gaining for last couple of weeks. It is not good news because the global inventories were just about coming to terms with a 5-year average number here. And with the kind of rise that we have seen come in for U.S. shale output expected to increase up till next year as well, is something that the markets are reading too much into. Apart from that, the strength in U.S. dollar, the equity market sell-off that we saw in last couple of weeks, and also the fact that the speculative long positions, which had been holding around record highs, have been unwinding, is yet another thing that has brought the prices down. But nearly 7 to 8% of a decline in the previous week is seen as oversold on charts. So there is a bit of a buying that we are seeing right now. And even with a bit of a decline, there is reports from JP Morgan, Morgan Stanley still putting crude oil prices at mid-70s by mid-2018. T. Gnansekar joins us to talk more about that now. Gnansekar, we'll just come to you, but just to put that point across, that even as the JP Morgans and the Morgan Stanleys have been putting the crude oil outlook for 2018 for the third quarter by up to 72 to 80 on the higher side as well. If you look at BP, they have a report that they came out with over the weekend where they say that they are working with their calculations of around $55 to $60 per barrel for the rest of this year. So the oil producers themselves do not think that the prices are going to run up. It is the banks and brokerages which are counting on in case of stronger demand estimates, and also the fact that we will see the OPEC compliance continue to support prices. Indian government, if you look at that, also have calculated crude oil prices average at 65 for this year. Last year was 55. So in that sense, of course, the prices are trading on the higher side. But the kind of levels that we were working with in sense of 70, 71 in the end of January definitely seem to have gone away. Another thing to watch out, of course, is that many of the refineries are going for a maintenance. The winter season demand is off now, and that's yet another premium that's going off the prices. Gnansekar, hi. What is your sense? Where do you see the crude oil prices now headed? Because there are just so many factors working into the market. Which one are you giving more importance to?
Well, I'm definitely not giving too much importance to the rising supplies. That's pretty much clear because I think, that's been factored in. The kind of fall we've seen from $66 to almost 58 is completely wiped off the entire 2018 year's gains. And that has also brought in a lot of buying interest because, technically, I think $58 in NYMEX is a very strong support. And a lot of speculative longs have also sort of liquidated. So at this point in time, I think you will see some good amount of interest come back into the market. Maybe it will be range bound for a while from here, 61, 62 levels. And possibly from there, we need to see how it takes shape. But as of now, I'm clearly looking to buy on dips.
How are you looking at slightly longer term? Because would you say that by third quarter, we still have a good chance of crude oil prices coming back to 70 kind of levels?
Very good likelihood, but the only headwinds is that you have a possible interest rate hike, because that tends to affect, commodities like crude and base metals, though precious metals might not be affected that much. So I'm sort of skeptical around second to third quarter how the interest rate cycle spans out and how it's going to have an effect on commodities, specifically crude and base metals. But with the current factors, I think there's a good likelihood we will edge back towards the highs. The technical picture looks sound.
Shekhar, Manisha, thanks very much, both of you, for joining us and running us through what the future for oil really looks like. Appreciate you joining in very much. I mean, just want to take a very quick look at what the market back is doing. 64 points higher, 10,519 is where we are trading at. And again, I mean, real estate, pharmaceuticals, metals are the three indices which are doing the best. I think we've got the management at UCO Bank ready with us, Ekta.
Yes, absolutely. We have the management of UCO Bank joining in. They reported their Q3 earnings and the losses, in fact, continued to widen. Asset quality also worsened this time round. We have Mr. Ravi Krishnan Thakkar, the MD and CEO of the bank, who joins in on the phone line. Hi, Mr. Thakkar. Thank you very much for joining in this time. Your gross NPAs have risen all the way to around 20.6%, and you've seen, I think, around a 4% rise in terms of the gross NPAs on an absolute basis. Can you just take us through the details this time in terms of the fresh slippages and what kind of recoveries you saw as well?
See, the NPAs have no doubt gone up a bit in this quarter, because it was mainly due to a few big accounts, including Arcom, and one was KSK and Lanco Group. So that was the main reason for the NPAs going up in this quarter. But going forward, we should see now reduction in the fresh slippages. And secondly, we also had to provide in this quarter for this NCLT, the second list, and to some extent on account of divergence also. So that also affected our profits. Okay. And
Mr. Thakkar, can you share these numbers with us? What were the fresh slippages this quarter compared to last quarter?
See, compared to last quarter, this time the slippages were around 3,500 crores against slippages of 1,432 crores in the last quarter. So as I told you, this was mainly on account of a few big accounts.
And how much of this was probably from the watch list and how much of it was outside the watch list?
See, I would say, I think more than 50%, say around 2,000 crore was from the watch list, and the balance was for others.
And what is the watch list right now?
The watch list is now reduced to a great extent, and presently our watch list would be around 1,900 crores.
1,900?
100, yeah.
Compared to how much last quarter?
It was around 3,600 crores.
Okay. So what do you envisage going forward, sir? Because you did see around 1,500 crores of slippages outside the watch list, and majority of them from the watch list. So what is the guidance that you can provide us going into FY19 about what we can see for slippages as well from the watch list and outside?
See, as far as a watch list is concerned, by and large, I think that is reducing every quarter, because more than 50% of the slippages take place from the watch list only. So going forward, the slippages, like there were a few accounts under SGR also, where the new investor couldn't be brought in. So there were a few cases which also slipped on account of that. So in this quarter, current quarter, the slippage is expected to be, I think, much below this figure for this December quarter. And we should be seeing a slowing down of the fresh slippages. Okay. And the more focus would be on recovery,
You mentioned that you've done provisions majority towards the NCLT accounts. Can you just tell us how much exposure you have towards the NCLT accounts as a total, the first list as well as the second list, and how much of the provisions are already done?
Both lists combined together, we have an exposure of around 9,000 crores.
Okay.
And for the first list, we already made a provision to the extent of 2/3, and for the second list to the 50% provision.
Okay, so how much is left to make in the next quarter of Q4 as well as FY19?
See, in the next quarter, the provision on account of this NCLT, these both cases, would be around 1,000 and odd crores.
1,000 odd crores. Okay. I just wanted to touch upon credit growth as well. How is that looking? Is there some sort of restriction in terms of advances for you all?
Yeah, see, we have been deliberately degrowing our balance sheet. The main reason was we didn't have adequate capital. But now with the infusion of fresh recap bonds and also we got some capital in the last week of December, we would be looking at a very nominal growth, but that would be in the very specific sectors and of higher rated accounts.
Okay. What would the division between retail and corporate be?
See, our focus would remain on retail and MSME. Presently, our corporate is almost 55%, which we intend to bring down to around 50%.
Okay. Can you just tell us what your asset quality situation within the MSME sector is looking like?
See, MSME also, there are concerns. The slippages are taking place in MSME sector also. But one thing is that the recovery is good in this sector. So we are trying to focus on that, and wherever feasible, we are doing a restructuring also.
Okay, just a quick last question. How much capital have you got from the government, and would you need to tap the markets for any additional fundraising?
Yeah, we got around 6,300 odd crores, both this capital infusion as well as the recap bonds combined together. And we required some more capital, so we are planning to go for KYP in this quarter.
And how much would that be to the tune of?
It will be finalized later on, but should be in a range of around 500 to around 700 crores.
Okay. All right, Mr. Thakkar, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is UCO Bank, where the slippages have come in higher this quarter at around 3,500 crores, and majority of that is from the watch list. But the watch list nonetheless has reduced significantly for them, which currently stands at around 1,900 crores for the quarter.